In this clip we will see a simple and quite effective stock trading strategy. With this strategy we have made over 90% winning positions. We will look at how to trade gaps, and what is a gap, how to use moving averages, and what period is best. How can we use resistance and support? How do we trade zone breakouts? We will also look at how to trade the gap. And no, in the last place we will also see the formation of the engulfing candle Japanese candles. Also, once again we will see how to determine where to put the stop level, and where to put our take profit. Because these are very important things, that's exactly why we have set stop take profit 1 to 4. But let's not waste time and move on to the graphics. As we can see today we will be trading stocks. We are located on JP Morgan on an hourly chart. Now we will look at, because we have sold these stocks, as we can see we have a gap on the chart.A. Gap is when there are no candles on the chart. If you follow the graph of different tools, you will see how in more than 90% the gaps are covered. And here we can see quite a big gap. We must remember that when there is a gap, it means that in a large percent of cases it will be filled by candles. But also we cannot open a position just because of a gap. We can't trust just one thing. In trading we have to use a lot of things. That's exactly what we're going to add a moving average for. With stocks, it is good to use moving averages with a longer period. That is, this channel will rarely give you examples of stocks with a period of less than 100. For those of you who don't know what a moving average is, we will now give some information about it. In our case, the moving average is yellow in color. Usually with moving averages we have to watch if we have a broken moving average from the price to open a position. In our case, we will bet on the safe side in trading, and this is not a broken moving average, but we will wait for a bounce from a moving average. Yes, that's right, it's a reliable way to trade. Now let's look at some useful information about moving averages. Our moving average has a period of 100, that is 100 days. We have chosen the color yellow. In this way, when the price reaches the moving average and pushes away from it, the yellow color will tell you to be careful about opening a position. Here we are a little later. As we can see the price reached the yellow moving average and bounced back, but it didn't just bounce back from the yellow moving average, but also the zone. Let's talk a little bit about this support and resistance zone. Support and resistance in trading are very important and they are quite strong because many traders consider them. We see how there are two bottoms. We immediately pass them for support. What we can do is wait for the price to reach the bottom again and look for a buy, or wait for it to break the bottom and start looking for sales. In our situation, we have a breakout of this zone, and after a breakout, the most reliable sell signal will be if the price returns and rebounds from the zone. And the broken support immediately becomes resistance. Do you remember when I told you that in trade we should use as many things as possible in our direction? The more things we have, the better for us, and with the more money we will be able to open a position. Of course we have to use proper money management. Let's look at what we have so far so we can open a sell position. We have a bounce from the 100 period moving average. We have support broken, after which it becomes resistance. We have a gap that we are waiting for and it was filled by the price. We also have a tested area. We can see later we have already opened a sell position. Since we also talked about money management, you should know that it is good to trade from 3% to 5% of the available capital. Follow the trading rules strictly. We can now sell JP Morgan stock after it closed the current candle and open the new one. Here you will find out that we also have an engulfing candle from the Japanese formations. Here is another thing in our plus. Yes, we will use the Japanese formations quite often, because they have quite a lot of power in the trade. Also, at a later stage, we will show you which Japanese formation, what percent strength is on the market. Engulfing candle is a quite used formation. With it we must know that the candle must be bigger than the previous one. But with these candles we need to look at the bodies of the candles, not the tails. The body of the sentence should cover the previous. You should know that this formation is quite used and quite reliable. But as we have said so far, we should not trust only her, or only one thing. You see in our case how many things we have. We have a large red candle covering the previous green candle. This is a very good example that we can remember. This formation of the Japanese candles gives us another sell signal. For this formation to form, we need to wait for the red candle to close and enter the other one with a position. Here we are a few days later. Our selling position is developing quite well. This is because we have many confirmations from different things. We see the gap gradually being filled by the price. If we look at the graph, we see that there are more gaps. Let's mark them with the green arrow, but even now we will explain to you why they are not reliable. If you have watched the video so far, then you have understood how reliable the moving average is. Gaps above or below the moving average are reliable. This way you can filter the gaps and raise their success rate. It's time to talk about stops and take profits. This is also a very important thing. If we can't decide where to put stop level and take profit level, sooner or later we will go bankrupt. Let's take a closer look at our example. We have opened a sell and we have set a stop level and a take profit level. We have placed the stop level above the moving average and above the engulfing candle formation. But not only that, as we remember there we also have broken support, which has turned into resistance. Here are a few things in our favor that we can use to determine where to put the stop. With these few things, we see how the price has made a top, and we can put our stop above the top. But we recommend that it is not exactly at the top, but a few points higher. This will be better because sometimes the price returns close to the top and then reaches the take profit, and it will not be good if it hits our stop level and then goes in our direction. So we put the stop level a little above the top, but let's see where it is good to put the take profit. We can put profits near the bottom. This is the case if we follow the position. In a little while you will see how many times our stop level is, and how many times our take profit level is. Let's mark the stop level in red and our take profit in a green rectangle. In this way, we will say that our stop level, take profit is 1 to 4 and a little dot, which we can say is a very good ratio, profit and return. Here we are, and a little later, you can see how the price of stocks JP Morgan hit our take profit, and we made a nice profit. If you start applying these simple rules, you will see that your profit line will only go up.
A great success!
We will continue to show you positions in real time, and we will show you the most reliable things in the trade. We will also show you what to beware of in trading, and what to watch out for. If you liked the video and learned something new and useful, you can share it with friends. This way you help our channel grow. And finally, let's discuss why we opened a sale of stocks JP Morgan. And why it's important to apply everything in trading. Let's see what we learned. We have shown you what a gap is, and what happens in 90% of cases when this gap occurs. Remember something important here. When there is a gap against you, it is better not to trade the given instrument until it enters a trend. We see the gap being filled by the stock price. After we have followed all the rules for gap, we have a retracement from the 100 period moving average. And here you saw how strong a moving average can be, and how price responds to it. We also saw why we should use long period moving averages with stocks. Here we want to remind you that if you have any questions, you can mention them in the comments. If you don't understand something, or you want us to make a video with more use of moving averages, you can write it in a comment. We have shown you how we have broken previous bottoms, which were supports for us, and after the break they became resistances. With this position, we saw not only a breakout, but also a retest of this zone. There is no way to tell you which of all the things, what power they have in trading, but we will show you how to use them. And we will show you what power they have for Japanese candles only. There you will see with percentages which formation how reliable it is. And since we talked about Japanese candles, here is the place to mention the engulfing candle that we looked at during the video. We see how the red one is almost twice as big as the previous one. That's why it's called an engulfing candle. You see the power of Japanese candles, and why they are so important for trading. They are one of the oldest for trading. We hope you learned something from this video and that the video was useful to you. If you have any questions you can ask them in the comments. Hit a like and share the video with friends. You can also subscribe to our channel so you won't miss our new videos.